good afternoon. I hope the weather's fine where you are. We've got a bit of sunshine here today, which is a pleasant surprise. So my name is John Stenhouse. I'm the Business Support Manager at the University of Essex, the University Enterprise Zone. And we are running our series of investment readiness on behalf of Essex County Council's Backing Essex Business, a new free support programme available from Essex County Council, delivered by the Let's Do Business Group. And as I said, Backing Essex Business is a free support programme. So I'm here today to talk to you and with my colleagues, Josh Clark, Nitin Patel and William Millar, about investment readiness and the ways to go and raise investment. So as I said, this programme is brought to you with the compliments of Essex County Council's Backing Essex Business, but it is available to businesses outside of Essex as well. So please don't be put off by the prominence of Essex appearing everywhere. Without further ado, I would now like to introduce William and Nitin. These are our entrepreneurs in residence who work closely with entrepreneurs to build pitch decks to make them ready to raise investment through our equity investment platform, Angels at Essex. So I'd like to hand over to William and Nitin. Please, after you, gentlemen.
Okay, good afternoon, everybody. And again, welcome to this webinar in the Backing Essex Business series. Thank you for attending. And as John says, we're going to look at the contents and structure of an investment pitch deck. So our agenda this afternoon is fairly straightforward. Just before we start looking at the contents of an investment pitch deck, we want to ask the question, is equity investment right for you? And just check that that's the right thing for you to be doing as a business. Then we'll go through the contents in more detail and we'll conclude with a summary at the end. As John says, if you want to ask questions, please do so on the Q&A tab in Zoom, but hopefully there will be, we'll leave time for people to ask questions right at the very end of this webinar. So if you haven't asked them through the session, you can ask them at the end.
So I'll go through some aspects of the deck as we go along and invite Bill to comment on it, and hopefully we'll get you a good understanding of the subject we're talking about today. And as we said, today we want to talk about equity investment and is it right for you? And if you look at some of the points, a lot of the points are around the fact that when you go into equity, you're actually giving away part of your business. And that can result in a lot of different things sometimes you may not have considered. So when you actually sell shares, you actually sell a piece of your business, and that guy actually owns that amount of your business. So typically he will have a say in what goes on, as opposed to you borrowing the money and investing it yourselves. So you have to be prepared to listen to someone else if you go into equity investment. Investors generally invest to increase their their investment value. And in terms of equity, they have a high expectation because it's quite risky. If you don't perform and the money they've give you, then it can be lost. So the risks are high, but their returns that they're looking for are higher. And typically they're looking for around 10%. So be careful to weigh those questions up when you think that, you know, I want to go and get equity backing for my business. Bill, you want to add?
Well, the comment I would make is remember that you're selling part of your business to the investor, and therefore you should treat it as a sales campaign. So it's, when we say at the bottom, it's a journey. Remember, it's a journey that you're in the driving seat and you've got to drive it through and make it happen. So treat it as a sales activity, treat it as something which you're going to need to put effort into, be prepared for disappointments and knockbacks along the way, and keep at it until you get success. You know, it's interesting, if you haven't considered other forms of funding, it's worthwhile looking into those, because you may find a form of funding that works without having to sell shares in the company. A good place to look is at the British Business Bank's Finance Hub. So that provides lots of information. It's an online resource. So just Google for British Business Bank Finance Hub and you'll find there an online resource that tells you all the different forms of funding that might be available to you.
Okay, so when you're looking for investment, you have to do some preparation. And one of the key documents that you have to prepare is what we call an investment pitch deck. And myself and William and lots of other people around have gone through lots of pitch decks. And what we found that there's some key elements that investors really need for you to be informing them through the pitch deck. And what we've got here are potentially 11, maybe 15 pages of information that we will go through point by point later on in this presentation to see, what the content of that should be. But it's very important that you actually answer those points in a sort of manner that takes people through the story of how you decided that this was a business, why you believe it's going to be a success, what you're going to provide for the customers, and what the investor is going to get by investing in this business. So we will go through all of these points in the presentation in the next 20-35 minutes.
I think a couple of things I would add is that this is the contents of the deck, but you want to assemble the contents in such a way that it tells a logical story from start to finish, as Nitin says. You're crafting a story around it. And you also find if you go to different pitching events, you'll be allocated different amounts of time to present in. And consequently, you need to think about the structure of the deck itself so that you can convey the key points of information that you want to get across within that time frame. So if you're given 5 minutes to present, it's unlikely that you'll be able to cover 18 slides. So you have to be able to condense that down and adapt it to different pitching events.
Okay, so as we said, one of the first things is actually understanding the problem that you're trying to solve. And that's also important to make sure that the investor understands the problem you're trying to solve, which is why you need a problem statement. It needs to be real. You need to be able to simplify the understanding of the problem, even if it's quite complex, because that's the way you'll get the investor on board. He needs to understand the problem you're solving and get a good understanding of how you plan to solve it. It's good if the problem is something that's come from a personal experience, because then you're very intimately knowledgeable about it. And particularly if it's sort of specific to sectors and industries. So understanding what you're trying to solve and getting that problem statement across is one of the key areas to a good deck. William?
Yeah, the comment I would make is that you need to be able to couch the problem in a way that the investor will understand it. Quite often you'll be speaking to a general investor who may not have industry sector experience. You need to be able to make it relatable to the investor so that they recognize it as a problem. And you want to, at this point, establish the need for the solution and hence the business that you're going to present. But sometimes there is no immediate need. Sometimes you may spot a trend in the industry that's going to happen, particularly if there's legislative change coming along or technological change coming along, which will give an opportunity in the future. So establish the need, establish the opportunity that's coming along as part of the problem statement.
Okay, and the next stage to the problem is giving the investor a solution, which is what your whole investment requirements will be around, and why the investor should be interested in giving you the resources to be able to do this. Now, again, this can vary in what you're looking for, but generally, when you're looking for money to be invested in a business, you've got to clearly identify the solution in an understandable way. Not all investors are experts in every field, and particularly our platform, we've got a wide range of investors. So, and we've made it so. So it's very important that when you want to get in connection with those people who have got the money to invest, that they clearly understand the problem that you're solving, the solution that you've got in mind to solve that problem in a manner that they can understand it. So stay clear of very much technical jargon and the buzzwords, but make them understand that there is a real problem that you're really solving. William?
Just picking up on that last point, it may be an obvious statement to make, but make sure that the solution is linked back to the problem, that the two things work hand in hand together. And once you've stated the solution, then it's going to open the door to a lot of why questions. So why is your solution the best? Why are you best placed to deliver it? Why now? Why will people buy from you? And you want to be able to answer them as you build the story going through the deck. And I always think of the problem and the solution statement as the two slides on which everything else is built. This is the foundation and everything else follows from that.
So the next stage that a deck needs to have is the understanding of the market you're aiming at with your solution. And this is a big piece of the work you have to do in clearly understanding that there's a target market that's big for you to be working in. There's a specific market within it that you know you can get to. And then there's a smaller piece of the market that you really feel comfortable that you're going to get quite a high traction within. But that's about understanding the market and understanding how well your solution will sit within that market, but also understanding potential competitors and what they provide. How are you different? Why what you're providing is going to be catching someone's eye. So when we say market opportunity, one is finding the opportunity, but the second is also understanding who are already in that market, providing a similar solution. Now, most people will say, my solution is different, it's innovative, it's new. Well, it will be, but you need to be able to show that to the individual who's going to buy it. So understanding what's currently in the market is key to be able to then sell your solution. William?
Yeah, we often see people coming along with market opportunity represented in terms of the TAM and the SAM and the SOM, the total available, the serviceable, obtainable, serviceable, available markets. And they give us a number and then a percentage, all divided down. But we find that if you take percentages of percentages of percentages, it doesn't actually mean much other than it can say that the market opportunity is big. So I come from an engineering background, and I like to look at the problem from the bottom-up perspective. Who is your ideal customer? How many of them can you identify? And how many are similar to the ones that you know about, and do you have enough resources to sell to them? So you can do some back of the envelope calculations to say that I can sell to X thousand customers over a 2 to 3 year period, and that will generate me so much revenue. And that gives me a view of how realistic it is to attack that market. And remember as well that your revenue is the thing that's going to give money back to the investor. So it has to be big enough, the market has to be big enough, you have to be able to sell into it in such a way that you get a return on the investor's investment that they've made in you. And also just be aware that other people can come into the market and disrupt it. And that's something you have to watch out for. So you may do this analysis work at the start when you're setting up, but you need to be keeping an eye on it as you go along.
Okay, so now we've talked about the problem, we talked about a solution, we understand the market, we know we are going to attract people who would pay us for our solution. And this is talking about how are you going to get them to pay you. And there's various ways in today's world of engaging people to buy things. But it's very clear that one of the key areas to discuss very early on in a venture is how do you see people paying for your activity? Do they pay on a use and go basis, or do they pay up front? How's the market currently doing that? Are you going to break the model? So when we talk about the business model, it's not just about saying, we need to work out. We really need to understand in depth about what's going on in that market from a costs, buying, selling point of view. And really see whether you can bring any differential to that market by changing the way people pay, as long as you're not underselling yourself, because no business is going to make money if you're selling less than what it costs you. So understanding the cost of delivering your service, your product, is one of the key elements of a business model. Depending on the value of what you believe you're creating for someone is giving you the ability to charge a premium. So getting to understand that market, getting to understand your competitors, knowing what their strengths and weaknesses are, is all part of building this business model. And sometimes it's also easier to have a simplistic model that people can understand, that actually takes some elements away from the decision making. Because if there's lots of choices, then maybe, in my opinion, it takes a longer period to make decisions. So make sure that whatever way you decide is suitable for you, it sort of fits the market and the sort of people you're aiming at. Bill?
In another life, I once met a lady who was setting up a cake making business, and I like to think I know a bit about cake because I've eaten quite a lot of it during my lifetime. And the cakes that she was making were really works of art, with lots of individual components in the cakes. And I said to her, you know, how much do you charge for these cakes? And she said, oh, well, I can't charge what it costs to make them plus profit, because people wouldn't be able to afford to buy them. And I thought, well, that's a telling tale, and that business isn't going to go anywhere. And you may think that that's a silly example, but quite often people will set up and do some pricing, but they won't have taken into account all of the costs that come into the business. And so you really need to understand your costs and make sure that you're taking those into account when you're doing your pricing and developing your business model. Now, of course, in some industries, the way the business model works already defined for you. So like in a software as a service model, you've got freemium type services and those kinds of things. So it may already be defined for you in the business that you're working. But no matter what it is, you need to clearly articulate the model, understand what it is, and make sure that you can articulate it and talk about it, because investors will want to drill into it. And they'll want to understand the sensitivities of various parameters in that model.
Okay, so the next stage of building a business is then attracting people and then selling things to them. And we've sort of put marketing and sales together, but they're two distinct functions. And one is a cost that you incur, marketing, and second is the money you take in through selling. So you've got to understand the market and the demands of that market in terms of the amount of money you might have to spend to attract people. And hence the marketing cost could be quite high. There could be a long marketing cycle before you actually see any sales. So you've got to be able to sustain a continual investment in marketing to make sure that you're creating the demand for your product as people get to understand your abilities within that market. And how much you spend, how you spend, who you target in terms of marketing is great. Understanding for people who are traditionally not from this area. Most investors will, business startups come from a sort of technical background, or particularly in terms of software and stuff, but they really do need to try and understand parts of what will get them in front of customers. And today there's lots of ways to market. So you've got to find the one that will find your customers rather than spreading around all the different channels. Lots of ways to get yourself in front of people, but ensuring that the message gets across is consistent and they can really understand what your venture, your business, what you're charging is all about. Bill?
Yeah, marketing is a cost for any business. So you really want to make sure that, particularly in the startup phase, that you're spending your marketing budget wisely. So that means you need to know how to reach your customers, as Nitin says. One of the things that helps with that is identifying the ideal customer personas, so that you can then see where they're getting their information. We saw a very good deck, a couple of days ago, where the lady had developed about 5 different ideal personas and worked out who these people were, what they did, and where they got their information. So some of it came from YouTube, some of it came from Instagram, and so on. So she knew how to target her marketing budget to get to those individual customers that she wanted to get to. So that's marketing. it's a cost, but it's a necessary cost. So make sure you know how and where you're spending your money. Sales then is the thing that brings in the revenue. It's a different function. They're usually linked together, marketing and sales, but make sure you understand the product that you've got or the service that you've got and who you're selling it to. Because if you're selling into large enterprises or public sector organizations, that may take a long while to get a sale closed. Smaller companies can make decisions quickly, but they may be smaller values. So that means your revenue has to come from lots of small sales, and retail customers imply volume sales. So you need to have low overheads. So make sure that you know what business you're in. Is it high margin, low volume, or high volume, low margin business, and tailor your marketing and sales activity accordingly. And make sure that flows through into your revenue forecast as well.
Okay, so as we said, part of the process is giving a good understanding to your investor what your capabilities are through the business. And one of the key functions that they want to know is sales and marketing and how that will turn into revenues. And this is about projecting what you think you're going to do in terms of the market over a period of time, which you need to show from a very deep understanding of where you are going to create that value for your product. And one of the key documents is the revenue projection, because this shows the investor how you will create value for him over a period. And this needs to be realistic, but it also needs to be challenging, and it needs to take into account the challenges you may face in starting up this business, where if you're a success, you may find that the people who are already doing that type of work will come back and try and react to your success by reducing the costs, introducing new products. So you have to be, market intelligence is always key to developing some useful revenue projections over a longer period. Bill?
Yeah, I go back to my engineering background, and I like to understand that the revenue projections are realistic. So for example, if you're going to generate £300,000 in year one, and each customer spends on average £1,000, that means you have to have 300 sales in year one, or roughly 6 per week, or on average 1 a day. So back of the envelope calculation tells me I need to sell one thing per day. And is that achievable? Do I have enough marketing budget and enough marketing activity to bring that sales pipeline to me? Am I able to close the opportunity at the rate of 1 per day? So there's some things that you can do to calculate if it's realistic. And then you can work out how sensitive each of the different parameters are in that model. And you can then do some scenario projections or what if analysis in the model itself, so you can try and figure out if new entrants come in, or the competition comes in, or people churn off, what impact will have on the business itself.
Okay, so we've talked about markets, we've talked about revenues, we've talked about understanding your competition. Well, this is a little bit more in depth about really understanding what your competition can offer in the market that you are entering, and some of the key things to look for, and particularly if you're introducing a very innovative product that may challenge an existing company's technology or product already, that you're not breaking their IP. You make sure that they can't look at your documents and stuff and say you're infringing the trademarks by copying what their marketing leaflets and things look like. So understanding the competition in the market is very important. Now, you can almost say, well, I'm too small to be worrying about that. But I think this is more about success. You've got to sort of get yourself organized for success. And that's when competition starts hitting you. So it's about being ready. It's about knowing when you're entering a market what can happen. It's not always about what might happen. So that's why we sort of make an emphasis about knowing the market and the competition. Bill?
Yeah, just be wary of saying that there's no competition, because if you're talking to an investor may be interested in what you're doing, because they may have other potential investments in their portfolio that are similar to what you're doing or related to it in some way that haven't yet come into the marketplace. So always be very wary of saying that there is no competition at all. And then just be wary as well that if you patent your idea, you're publishing it and making it available to the outside world, and then you have to be able to defend it if you choose to defend it. So just be aware of those two things.
Okay. So what we find as well when we're talking to people about their decks is a lot of people have sometimes done a lot of work prior to actually getting themselves believing that they can turn it into a business, and particularly that they want to go and get someone to invest in it. So what we really then have to focus them on is actually understanding their current status and what they've done, how much of the work they've already done, what's left to do. So it's, again, very important to understand the sort of work you've done, where you've got holes to fill to complete the project, and really get the investor to understand, particularly if the work you're doing is a lot of self-resources, because in the end, if you build 90% of something yourself, that's the sort of value that you want the investors to be buying off you. So it's very important that you understand and do as much as you can upfront, but then also to be able to sell that as a reason for an investor to invest in you, particularly things like customer trials and awards, because all these things start taking the risk away from the investor, because it's showing that you've been able to attract people, get traction for your idea. Bill?
Yeah, I think people, entrepreneurs, whenever they're in their business and looking at it, they're always looking forward to the things that they've got to do. So, what we've got to do this week, next week, and so on. And they forget what it is that they have done. Because that's just part of the journey. So it's important to stop, look back over your shoulder and see what you have achieved and get that put down on the slide, because that gives validation to what you're doing in the business, that you may have achieved some sales already. You may have gone into trials with customers. You may have applied for a grant and received the grant or got good feedback on that grant and so on. So really just make sure that you document the achievements that you've already made, and because that represents to the investor a story of being able to do what you say you're going to do and make those and achieve those achievements.
Okay, so we now talked about the sort of admin parts of raising a business, some of the key elements of understanding who your customers are going to do, and now we talk a little bit about the team. Now, most people tell you in these sort of situations that investors are investing in you, the team. Well, that's true, but it has to be shown to be the relevant group of people who are driving that business, who are key to actually making that business function. So if you have quite a large team, then it's not always necessary to put everyone on. And if it's a small team, then it's very important that you cover some of the key functions by showing that you actually have the ability to get those resources. So projecting the team onto the investment deck is very important, but it needs to fit the investment you're looking for, and the people within that team need to be the guys who are capable and are going to be making that venture work. Bill?
Yeah, initially, right at the very start, at the beginning, it's usually one founder. If it's only one founder, you really want to get somebody else brought in to provide some resilience. But if it's one or two founders, they're the people that are building the business. But there does come a time when you need more people. So a founder or a couple of founders aren't able to do everything. And so you need to bring in other expertise. And that's one of the most difficult things for founders of business to do, is to know when to bring in those people and to be able to relinquish the reins in that part of the business to somebody else and let them deal with it. So attracting the right people, recruiting them, looking for people who are going to take the business forward as well is something that you want to consider, early on in the business, but, recognize your own strengths, your own weaknesses, and where you're going to need additional help and bring that in. Sometimes that'll come in the form of advisors. It may come in from investors as well. You're looking for not just money, but also expertise, but then you'll gradually have to grow the business. But make sure that you document who is in the team today. If you have any gaps where you're thinking of getting those in the future, and perhaps that's something you're looking for investment for.
Okay, so this is one of the key areas that you get into discussion with potential investors is one, how much do you want? And two, how much equity does it get for that? But before you get into that discussion, what you really need to know is what are you going to do with that money and why do you need that amount? So you've got to really understand the amount you're asking for. What are you going to do with it? Why that is necessary to get the business from where it is to the next stage? Why that will make a big difference to the business if it's currently progressing, and those things. Because when you're asking someone for money, it's very important that they can understand that you're going to give them money back plus what you've took off them. And that you can only do at this stage by clearly making them understand that what you're going to do with the money is going to be useful in making that business more valuable. It's also going to be sensible in what you're using for. And when you are able to use it, you can justify the reasoning. Now, not everything you can do at this stage will be 100% right. But what you can do is actually understand why that's the need, understanding the trends of competitors alike, if you're spending it on marketing, understanding from what's going on in the channels that you might want to spend on marketing, why that's the right area, so you can actually answer those questions, because that will be an area where a good investor will ask you what you're going to do with that investment, and the things that you are talking about doing, are they not necessarily questioned to a level that you shouldn't be doing them, but questioned to a level where he's satisfied that these are the right things for you to be doing. William?
At this point in the deck, remember, you've told now the complete story. So you've got the point where you've told what the problem is and how you're going to solve it, how big of a market there is, how you're going to reach those people in the market, how you're going to make money, what your revenue projections are. You've set out your stall in terms of the team that you've got, the competition that exists, and the current status. So now you're at the point where you're asking for the investment, and you should really have told the story in such a way that the investor's really buying into this. I can see why you need this investment, and the amount of money that you're asking for is not unreasonable, and I can see that it all makes sense at this point. So that's the why you want to be able to tell the story through the whole deck to get you to this point, such that they're ready to open their checkbook if they had a checkbook and sign on the dotted line. But remember as well, you may not just also be looking for money, but you may be looking for expertise as well. You may want access to their own network to help you with the sales activity and so on. So that there's more than just money that you might be looking for.
Okay, we're going to move on to the next one pretty quickly through this one, because we covered some elements of this. But the one that stands out here is when you're asking for money, just make sure it's not all for salaries. But on the other hand, if there's a need for salaries because they're justifiable, or because you've got enough resource that you put in to be able to show the investor, then fine. But just be wary that the people are a bit concerned when most of the investment is going to go into salaries.
Yeah, just one thing, we think of the amount of money coming in, that's an investment going into the business, but what you want to see as an investor is what's coming out of the business as a result of that investment. So what's going to be achieved and how will it help the business grow? So those are kinds of statements that you want to make on the deck at that point.
So the summary. So I'm going to start at the bottom of that summary. And the key here, once you've done all your work and you've understood what you're looking for and put the deck together, and it tells a story that is really interesting and understand, but you always review. You don't have to sell it to anyone. So make sure that you clearly understand that once you make the decision that you want to sell, then all the things we've talked through are elements that are different to you 100% owning a business. But as we said, the pitch deck is there really to tell a story, is to get people interested in talking to you. It's making the first impression into an environment that you've got something that's different. So consistently, what we talk about is getting across why this is the right business that's going to create value for your investor, and taking him through the deck is one of the important journeys that you have to make sure that comes across from all the work you do.
The only comment that I would make is just make sure that everything is self-consistent as you move through the deck, that you can move backwards and it all makes a complete logical story that makes sense, and that if you're quoting numbers that they do add up. The other thing to remember is that if you're presenting this in a pitching event, you're also presenting yourself as well as the business. So you want to get your own passion coming across, and you want to get your own integrity coming across. Things like your experience and knowledge and skill ought to come out as well. And you don't want to make the investor think as he goes through. The only thing you want them to think about is how much are they going to invest, but don't leave incomplete stories or take them off at tangents. Take them through it, lead them gently through it such that they want to invest at the end. And with that, I think we'll conclude with questions. If you want to get in touch with us, use the email address there, uaz@essex.ac.uk.
But the first one I'll ask is based on the business model. So you say it's generally more difficult to start low and increase the price. How do you feel about early adopter discounts when you have a disruptive product?
Okay, I think that really is around the market. If you're trying to get people to do something to a product that's not something that they might buy, but once they get hold of it, they would see the advantage of it, then it makes sense. And then you're relying on them to actually get the marketing done for you by telling their friends, family, and other people who potentially. So I suppose you've got to really understand what's your aim by doing that, because if you're going to have to sell a discount from day one and there is no real reason behind it other than the fact that that might be the market price, then that's a challenge. But if you have really a good understanding of what you're trying to achieve by setting a price lower than where you want it to be, and then can see the benefits of that, then that's a good plan.
Yeah, I guess in some cases you may offer a discount, but expect the person buying it to do some work for you. So you may offer them something and say, well, I want you to provide me with feedback on this, or I want you to test this out for me, or something like that. So in a sense, they're paying through the work that they're doing. So again, as Nitin says, it very much depends what your aim is, but make sure you understand what you are trying to do, and it does make business sense.
Invariably, offering a discount to early adopters doesn't actually fundamentally work, because it puts out the perception that you've actually overpriced your product or service. And as William says, get something back in return. So it could be a referral system, something like that might actually work better. So in other words, you buy it at the full price, but if you refer someone to it, you can get a discount. You will get a discount back as a referral fee, something like that. So something in return, so that the service is still valued as it should be.
Question now on marketing and sales. So if a company is operating through a distribution model, which would you treat as a customer, the distribution channel itself or the end client?
Yeah, well, this is a very difficult one. I spent my lifetime understanding that, because most distributors will only hold stock if you've got a demand, and the demand they expect you to create with the end customer. So it's a challenge that you have to balance between doing enough sort of marketing and the product needs to be something that people want to be able to then get distributors who will willingly actually hold it for you as stock so they can distribute it when the customer comes along. So it's one of those where you have to balance, new products, services need distribution. These guys have the ability to reach markets through their past experiences and contacts, but on the same basis, the big demand for you to actually spend money to create that demand so they can distribute is also a challenge. So I'm not sure I've answered your question because I never knew the full answer either.
Ultimately, the end client is the person that's buying the thing that you're producing. So you've got to understand what their needs are and what they're expecting and how you can service them. But the distribution channel is also, in a sense, a customer of yours, and you are a customer of theirs as well. So you have to make sure that they're going to provide the level of service that you want as well. And some of those things are all difficult to achieve and tie together and knit together to make sure that the end customer gets what they want.
Yes, if you're using distribution channels, really you're doing B2B, because you've got to sell to the distribution channels to get them to sell on your behalf. But the end user, the customer, the B2C at the other end, has got to want to buy your product or service. So effectively, you've got two customers and you've got to address both separately because they have different goals and different needs. Distributor needs to work with a reputable supplier who can supply on demand to fill that channel, because otherwise their reputation gets shot. The quality of the goods, the quality of the service, and they've got to make money at it. So it's got to be worth their while. So effectively, it's a different customer. So you've got to balance that, and you need experience, you need help and support. So really you need a mentor or an investor who's done that before, who can actually help you with that process. So you need expertise.
So the next question that we have in the Q&A box is about team members. So in this case, if you don't have anyone in your team, how do you get a team member, a co-founder, to come in? If you don't necessarily, you're not necessarily working with anyone on the project, how do you get those team members to come in?
It's one of those challenges that you have to sort of look around for. So there's pitching situations where there is particularly relevant for you to go to and say, look, this is my idea. I'm looking for someone. And, there's events that specialize in those sort of things. And that's how you do it. It is no real answer to that in terms of sometimes people are two friends who work, sometimes they're gone to the same university. But I think there is a whole load of pitching events now that are around that. And there's also, sort of incubators where you as an individual can go and put your project across, and then they team you up with what they believe is a suitable co-founder for you. So it's about research and sort of looking at what is it that you really are trying to do, and understand whether it would actually interest other people as well.
Yeah, you got to treat it like another marketing campaign and sales campaign, because you're selling your business idea to somebody else. You want to market that out to different people. The key thing is to look at the skills that you've got and what skills you find or you think you're lacking, and then look for somebody that can complement what you're doing, and then somebody that you can work with. So again, as Nitin says, very much an activity that you've got to go and out and do some looking around to find somebody through your network, through LinkedIn, through whatever, but make sure that you're looking for somebody who can complement the skill that you've got.
I was only going to say that, if it's your idea, it's your widget, it's your project, you cannot do everything on your own. And you might read stories about investors investing into an individual, Dyson, for example. But no, they didn't invest in Dyson, they invested in his team. So, you can still be the front person, you can still be the chief operating officer or the CEO or whatever title you want to give yourself. But it's the team behind you that will encourage investment. and longevity of your business. What happens if you fall ill? What happens if you get COVID or influenza, or you break a leg? You know, what's going to happen next? So you do need a team, rest assured.
Thanks, John. The only thing that I would add there as well is I think, you know, but in various industries, there's the opportunity to network with people who are innovating in those industries. So, you know, being involved in that space, you can often find like-minded people who, you know, might be suited to working alongside you. Okay, so the final question we've got in the Q&A box is, at what stage of a business's progression is the right time to ask for investment? Is it at a time where a business has already had tangible results in terms of generating revenue?
Okay, so generally what we find the best traction is when you've actually started getting the revenue, but that's also when you've done a lot of the work and spent a lot of the money that you need to put into that investment. But if you can actually create that situation where you've been able to support the initial startup of the business, done some of the key things that would get you to a place where you can actually get money for supplying your service, your product, and then say, I need some more support in terms of funding to make it slicker, make it more efficient, introducing newer aspects of the potential venture you're already doing, then that's what we find are real attractive businesses. And that's where you're then controlling, you know, who you want to invest in you. But that's the challenge, because not everyone can be in a position where they've done maybe 50, 60% of the work before they start asking for money. William?
Yeah, my short answer to that is the right time to ask for investment is when you need it and you know what you need it for. So that can be any time through the business life cycle. So very early on, you're probably looking at investment from, you know, family or friends or other fools, as it's sometimes said. But you may be eligible for a startup loan or something like that. So you can get debt and, you know, investment from a bank in the form of debt. When you reach the stage, you know, as achieving results, and presumably that by that you mean attracting revenue, then you may be able to fund it again from debt from a bank or something like that. So, you know, sometimes people think of having equity investment as a badge of honor, but it's only one form of investment in a business, and there are other forms, and plenty of businesses survive and go on to success without having any equity investment in them at all, other than from the directors themselves, but they grow organically or they grow through debt investment. So it's really know when you need the investment, know what you need it for, and look at the different forms of investment that you can get. You know, crowdfunding is another form of investment that you could have.
There are multiple forms of investment, and we have in our portfolio virtually every kind of investment that you can imagine, whether it's equity, loan, debt, you name it, or grant, you name it, it's there. I would say each business is an individual business and has individual needs. The common denominator is they all require funding, but how that funding is obtained is different to every single business. So don't assume that there is only one course of action. There is always an alternative. It's very rare that there is only one route. Well, it only goes to say to thank the audience for staying the course, and I do hope that you value the information that's been provided today. It doesn't stop here. We have a series of webinars which are readily available, and Josh will flash up where you can find those. And of course, all of these will be on YouTube in the future, if not there already. My thanks goes to William and Nitin, who are indeed experts in this field, and with the support that they have provided, let's talk some numbers. Over 250 businesses have been through our program since we launched in May of last year. We've had over 1,100 people attend our webinars, and we've raised over £10 million for 26 businesses, which have successfully pitched on our platforms and had live pitching events. So remember, we are here to support. Our services are free. We are backed by Essex County Council, Let's Do Business Group, and the Backing Essex Business program. But it's all, we are here for non-Essex businesses as well as Essex businesses. All right. Well, thank you very much to Josh for managing the whole program, for Nitin and William for presenting to the audience and participating. And I look forward to seeing you again next week. Thank you very much.